Hello, everybody. Welcome to the webinar. We'll get started at this time. My name is Troy. I'm a Senior Account Manager with AvaTrade. I'll be leading the session this evening. As we get started, let's do a quick systems check. If you would, type OK in the chat box as long as you're hearing me clearly and seeing my screen all right. I see some of you typed OK before I asked, which obviously you've been to some of the sessions already. Thank you very much. I've got enough responses. It looks like we're up and running just fine. If anyone runs into any problems as we're going along, please let me know. So we're covering some technical analysis today. Wow, is it a great day for technical trading? I'll show you some huge payoffs that would be there had you done some simple buy stop, sell stop type strategies. With the way the news was running today, we'll take a look at the fundamental news. Pending orders would have worked great, and also market moves with proper technical entry points would have worked great as well. Warren, if you're not seeing the screen, please check your setup. It's got to be something on your side. Most everybody indicated that they're seeing everything okay. All right, so keep in mind, as always, no one trade is guaranteed to bring profits. There's risk involved with any trade you make. In the end, you want to risk manage things in a way that makes sense for you in terms of trade size, overall exposure, where you're putting maybe a stop loss or a hedge position to protect yourself. In the end, there's obviously the potential for very nice profits. That's why we're all here, obviously, is to go after those nice potential profits. But you've got to cover yourself in one way or another with your risk management as well. Now, keep in mind that what we cover is not meant to be financial advisement. We're taking this from an educational perspective to hopefully add more tools to your tool belt, so to speak, to give you more knowledge to base your decisions on as you're building your strategy or improving upon your strategy and entering into trades. And there is a nice tool as we speak about risk management on the AvaGo mobile app. That's the app developed by AvaTrade that has some special features on it, one of them being AvaProtect, which is a nice feature that allows you to protect against any losses you will have during the covered time period for just a small premium cost. And that's available on gold, silver, FX pairings, maybe more assets eventually as time passes. So if you haven't put the AvaGo mobile app on your mobile devices yet or device, I would suggest doing so. Check it out. There are some nice features that also calculate exposure for you to your stop loss based on your trade size, calculates margin requirements, potential profit, etc. in your account currency as you're setting up the trade before you ever take the trade. And for some people, if you don't know how to do those calculations yourself, it could be a vital thing to have that it does that for you with the app. And for others, it's just a time saver. Even if you know how to do the calculations, it's nice to have it instantaneously calculated for you in terms of exposures, take profits, margin requirements, etc. before you place the trade as you're setting it up in the order window. All right, so technical analysis is the focus today. We will look at some fundamental news before we get on the charts to do the technical analysis on my demo. You're welcome to be on your live accounts, make moves on things that you like, that you think is something you're interested in. What is technical analysis? For anyone who's new to things, it's basically looking back at the movements on the charts, usually candlestick charts, and looking for patterns that you think are predictable or suggestive of what might happen in the future. And what happened in the past is no guarantee to repeat itself in the future. But as we go through the charts, and as we have over the past weeks and months and years, we see each week these patterns are quite predictable, quite repetitive, and we'll probably see that again today as we go through the charts, how that can be done to hopefully help you gain an advantage over just random chance of guessing. Okay, now there are different ways to do technical analysis. Some use indicators, which is just fine. I make use of some indicators from time to time. And the other way is using manual methods, drawing your own price levels, your own trend lines, etc., which is really what we lean most heavily on in these webinars. for a couple of reasons. One being, you know, you can adjust your manual methods to what you know about fundamental news, and an indicator typically can't. It's just programmed, and it's only as good as that program. And so it gives you the flexibility to understand things beyond what the indicator can do by doing manual methods combined with understanding the fundamental news situation. And then once you've got a grasp of that, adding indicators to assist you can be quite helpful, because then you know which signals from the indicator you prefer, whether it's the buy signals or the sell signals, based on what you already know from what you've seen on the charts and in the fundamental news. So as we go along, if you have any questions, let me know. If you want to give any input, please suggest ideas, give input as appropriate or as you're interested in. I'm reading a question here just to see what someone's typing. Let me type for Mohammed. He can't hear. I'm just telling him to check his audio. Okay. So let's go ahead. Let's get to where we can look at some information. First, quickly, what's the fundamental news situation? And by the way, I mentioned the AvaTrade Go mobile app. That's available under the platforms link at the top of AvaTrade's main website. And if you click on AvaTrade Go using your mobile device, obviously, go to this link and you can download from either the Google Play or the Apple App Store the AvaTrade Go app, and you'll see features on it like AvaProtect. I mentioned protection against losses for small premium costs for defined time periods. And you'll also see that when you set up your take profit or your stop loss, it's giving you the amount in your account currency that you would make in profit or that you're risking to the stop loss mark. It also, as you can see here, tells you the margin requirements as you're setting up the trade size. And that's before you buy or sell on the position. All right, Mohammed, I'm glad it's working for you now. Okay, so that's AvaTrade Go, AvaProtect. It's something you might check out. What's happening today? Wall Street soars on hopes of stimulus, coronavirus vaccine. Okay, positive news coming out again. We talked about it last week, that as the different economies around the world are coming out of quarantine, we can expect bullish momentum, days where there's really positive momentum. And as stories come out about either progress with vaccines or progress with medications for treating people who are infected with this coronavirus, you can expect bullish momentum. Today was one of those days. And it wasn't like just an hour ago you had that indication that, hey, today's a day I might be looking to buy on indices or sell on gold or buy on oil, which are all affected by these types of positive sentiment. You could see that early on. And how you can tell early on in the day which way is the sentiment. The futures were running even before the US market opened and the Dow Jones jumped 850 plus points up. The futures were green all day today. The futures market, we trade on the futures on our platform. They were green all day. The S&P 500, the NASDAQ, etc., major indices. And the volatility index was red, meaning fear, that's the volatility index. The VIX, S&P 500 VIX index is red, meaning down, it's dropping, meaning volatility is dropping, fear is dropping, right? And so within really literally 5 seconds, way earlier today, you could have looked on investing.com, you could have seen the futures were green and the volatility index was dropping. It was red, meaning positive sentiment. Okay, doesn't take long to see that. If you read the specific headlines, you could have seen positive stories all day long today as well. U.S. auto industry returns to life after lockdown. Okay, that was updated 2 hours ago, but was posted much longer ago than that. And if you go back, listen to the recording of Friday's webinar from last week. It's available on our YouTube channel. The webinar we did Friday, we talked about exactly this last week. The auto industry opening up, creating positive sentiment on the markets. Okay, so This is already there. It's already known even in the last week. There's positive momentum coming, and when new headlines come out about it, you can expect momentum from them. Now, U.S. home builder confidence rises in May, updated 3 hours ago. Okay, we're going further back in time today, and this was first posted even earlier today, before that update. Ebert, no problem that you're late. So again, positive sentiment headlines to reaffirm what you could have saw in 5 seconds, right? Even this morning. Futures were in green when the market was first opening, and all through the morning and afternoon, futures were in the green, and volatility fear index was down in the red, dropping. Okay, that was known throughout the day today. So then we see headlines throughout the day. Positive, auto industry returns to life. U.S. home builder confidence rises. Gold reverses after drug tests give hope for quick economic rebound. Okay, drug tests. That's not just necessarily vaccines. That's treatments for this virus. Meaning, even if the vaccine's not ready till next year, if there are really good treatments coming out, drugs that work really well, then why should anyone have to be in quarantine unless you're like a really high risk group? If there are medicines that maybe will work really well to lower the risk, even if you catch it. So these sorts of headlines are the market is responding to them tremendously. Okay, and this news was already breaking through the weekend as well. So all of these positive news headlines and the quick look you can do on the futures and the fear index gave you right away early on today the idea that sentiment was positive, and maybe when you're doing your technical analysis, you should take that into account. Type OK if you're with me so far. All right, good. That's also partially my check to make sure the audio is still up and running. Thank you for the responses. Okay, so let's take a look. Now, this was last week. This was Friday. We were looking at gold and saying, boy, it's going to go one way or the other. And it was ranging, and boy, did it break upward. Let's take a look. It went upward last week and back down today, right? And so if we go to 1 hour candles, we can see this drop has been through the day today, all right, with the positive sentiment. And let's just get rid of some of these old lines. And exit. Okay, so at the start of the day today, you had a resistance level. Okay, we go back. Here's the 15th. Here's the open somewhere in this area today. Let's look. 18th at 5 a.m. 18th. And we'll go back and find the first candle for today when the market opened. 2300, we're getting there. Technically, the market opens Sunday night, platform time. And so we're looking, here's the 15th, and then this is the first candle as the market opened on the 17th. Okay, here, this is the open of the market. And so what we see here with gold, if we're doing just a plain technical strategy, it broke this resistance from Friday at the open. So purely technical trader can see it broke this resistance and you trade up. Okay, so momentum broke up and it climbed. Now, it flattened out at the top, resistance, resistance, resistance. As the news was really breaking today with these positive headlines and you saw the sentiment was positive, to take a shot to sell off of this resistance level at the top, okay, you can see that drop didn't start until after 11 a.m. GMT time, platform time. So that's quite a ways into the day today. To see the positive sentiment, to see safe havens might have a reason to drop, and to see the resistance level form and put your stop loss above that resistance, so you don't have to risk much. Technically speaking, that's a strategy. You see a resistance level, put the stop loss above it. You see positive sentiment, maybe gold will drop, and you take a shot with limited risk, and look at the drop that occurred all through the day today. It really kept dropping. My first take profit mark might have been this first support level right here. This should have been support. It blew right through it. Honestly, I would have taken profit here above just before it reached this old resistance level that it broke through early this morning. This would be your first logical spot to take profit. Perhaps you bought up off that support. If you did, you lost, but you could have gotten in with another sell stop below that report or that support, and that sell stop went all the way down and would have reached the next support level before it paused, which is the next logical spot to take profit was this support level down here. Okay, so the technical analysis without paying attention to any fundamental news today would have worked very, very well. At the open, it broke this resistance from Friday. Broken resistance means buy, right? Technical strategy. A buy stop would have taken it as it broke this resistance level. It didn't gap past it at the open. It took an hour or so to climb up, break this resistance. You could have had a pending buy stop. Soon as it consolidated and went sideways, you take your profit. Now that it formed resistance, you see positive sentiment on the markets going into early this morning. You put your stop loss above the resistance, take your sell, and look at the payout, take profit before the first support level. If you were buying up off the support, purely technical trading, okay, you took one loss, you hit your stop loss, and you have your sell stop below the support. It drops and pays out quite big all the way to the next support level. So I count 2 out of 3 successful trades there, just with purely technical trading. If you put in the fact that there's highly positive news today on the markets, you might have been selling the safe havens. And so you easily could have been in on 1, 2 moves, and now it's testing the next support level, isn't it? Okay. A purely technical trader might say, okay, I don't care about the sentiment today because honestly, gold has been all mixed up with does it go up or down with good news and does it go up or down with bad news? Lately, since this pandemic, gold's actually risen a lot of times with good news and dropped with bad news, which is backwards to normal fundamental thinking. So I can understand a technical trader saying, with gold, I'm just going to trade with my technical rules, okay? It's on a support level right now. Let me pull this line down. There's the support level. This was the breakthrough last week. Support, support. Look how many times it tested this support and didn't break it, okay? It's right on top of it now. So should you buy off of this support? What I would do, technically speaking, you're on the support level now, Mohammed. If you're saying, where's the next one? Down here, okay? I see another support level right there. Okay, you see this old resistance back here? Resistance, and then breakthrough here. So if this breaks, you're looking at 1722 maybe, another $5, $6 down. Okay, Zolani, good question. So that's what I was about to get to. Before I would buy off this support, one strategy I might choose to employ is go to the smaller candles now, 5 minute, okay? Before I would buy off the support, and it's right on the support right now, right? You might want to see an uptrend beginning. Right now, there's no uptrend, okay? And what do I mean by uptrend and downtrend? Okay, you see here, the low points were getting lower, and the high points were getting lower, okay? High point, high point, high point, lower, 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 low point, lower, 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 lower. That's a downtrend. All of a sudden, the low points stopped getting lower. They went flat, but the high points are still getting lower. You see, high point, high point, high point, lower, 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 low point, flat. So this is a downtrend that has stalled, but it is not an uptrend yet, right? So many traders, and it's not the only way to trade, but many traders will wait until the technical analysis shows an uptrend start up off of the support level before they trust it, before they buy. So you zoom in on the smaller candles, 5 minute, even 1 minute, and you're waiting to see a higher high point, right? The low points got flat. You're waiting to see a higher high point before you say, now it's an uptrend. Right now, it's not an uptrend yet. Okay? So to know that the trend is reversed, you need to see an uptrend actually form. And so by zooming in on the smaller candles, you can wait and see. You could put a pending order. You don't have to wait and see physically, right? You can say, okay, where's the next resistance level on the 5 minute candles? Maybe right here. Okay? Maybe this resistance, you say, if it breaks above that resistance, then that's enough of an uptrend for me, maybe. Okay, so then you say, I'll put a pending order up here, just above this resistance. If it breaks above that, then I'll trust the support level and buy. Type OK if you're with me on that concept. And the idea is the location I said would indicate an uptrend doesn't have to be that exact location for you, right? You might be convinced sooner or you might be convinced later. Maybe you're convinced if it breaks above this high point that it's an uptrend. I like to see a stronger reversal before I trust it, meaning I like to see it go above one high point and two high points before I say, that's a reversal, that's an uptrend. And then in combination of seeing a reversal of the trend and you're just above a nice support level, now you have two reasons, technically speaking, to buy. Okay? And everyone's checklist is a little different. I usually have more than one thing on my checklist. I don't just want to see that I'm above a support level, which it is, and right on cue, on that support level, it stopped dropping lower. I like to see the support level. I like to see the low point stop getting lower, but I also like to see the high point break through a couple small resistance levels to establish an uptrend. Now I trust it, maybe. Okay? Good questions. So this is trying to bounce off the support level, but it has not bounced yet. Okay? It's going to break one way or the other soon. It's either going to break this support and drop further, or it's going to establish an uptrend. So you could put a pending order up here to buy if it breaks into an uptrend above this high point or this high point or this high point, whichever spot you choose, right? And then just have a small risk to your stop loss back down below maybe one or two support levels. And honestly, if I'm waiting for it to break through 1, 2 resistance levels before I get in, then I'm going to be patient with my stop loss and put it back below the major support level down here, because that's the support level really that you deem significant. Okay. Now, what about the opposite? You also could sell on this, right? A purely technical strategy is not trying to guess one way or the other. You're looking for confirmation to get in because of technical confirmation of a trend. So you put your pending buy stop up here. And if you don't know how to do a buy stop, I'll show you. Pending order, switch it from market execution to pending. Buy stop is pending buy stop. That means buy from a higher point, and you program the price that you want it to buy from here. And you can put the stop loss and take profit according to that entry point, where you'd have your stop loss back down and your take profit somewhere up. Okay. And if we wanted to say, well, what if it drops? Okay, this is a major support level. If it breaks that support level, you can sell from somewhere down here. And let me get rid of some of these lines. It's getting a little crazy. So let me get rid of all of these lines that could confuse someone. Okay, so if it breaks this support level, then that's confirmation of a downtrend. So then maybe you have a sell stop pending order ready to sell if it drops to a price you deem significant enough to have broken that support. So you're waiting for confirmation of an uptrend back up to buy with a buy stop, and you're waiting for confirmation of a further breakthrough of this support, a further downtrend before you sell. And you can surround this with both of those pending orders, guaranteeing that eventually you're in on one, right? And since you're waiting for your entry point that you deem a perfect entry point, you can have your stop loss the distance away that you prefer. Doesn't have to be so far away. So you can risk less and have a larger potential profit by being selective with this type of surrounding strategy with pending orders. Okay, that's one option with gold. Crude oil, and by the way, if we want to look at, let's go ahead to crude oil, and we'll take a look at what's happened with crude oil. It's been climbing all day. It makes sense. We talked about last week, there were two things helping to drive oil prices up. One being OPEC nations and other nations like the US and Russia have agreed to production cuts. Okay. And so that helps drive the price of oil up if supply or future supply is being cut because of production cuts. And then the other factor are economies opening up around the world coming out of quarantine. Positive news about drugs, vaccines, etc. is helping to drive oil prices up. So we look at that, and by the way, we looked at the futures contract prices at the cmegroup.com. We could look at it again if you'd like, and you see the further forward you go on futures contracts, further into this year, and you see it on our platform. We offer different futures contracts now. If you don't want rollovers, you see the further forward in time you go, the higher the futures contract price. Why is that? A lot of investors anticipate the price to go up. That's why. And so, simple buy stop pending orders. Look how many you could have won on through the past, not just today, but past week. Resistance level, you put you draw your line, you put your buy stop pending order. Here's one winner, right? Why would you be putting buy stops? Because the fundamental news kind of supports that, and the tea leaves have been written into the pending future contracts that are coming up for some time. Okay, breakthrough. On a resistance level, there's a profit. It consolidates and goes sideways. Draw your next line. Breakthrough of this resistance that formed, another profit. It becomes support. As expected with technical strategy, a broken resistance many times becomes support. So it breaks through the resistance, you profit, it comes back, acts as support and bounces again. So you could have traded up from the old resistance that was broken. Here's your next opportunity to trade up off that support, only risking a little bit to the underside, which it never broke that new support level. You draw your line. If you missed the bounce off the support, here's the resistance. Once it breaks through the resistance, it tested it back down and up it went again. Another profitable trade. Once it formed resistance again here, resistance, it pulled back. It breaks the resistance again, another buy stop move, another profitable trade here. Okay, it formed resistance again here. Resistance, resistance, resistance. This brings us into today. It broke the resistance here. So again, a buy stop order above the resistance would have paid off quite well again today. Okay, so that's the ride up today. Now there's been a pullback. It's normal. Eventually that strategy will die. The momentum will at least pause and you'll get a pullback. So had you done one more buy stop off of maybe this resistance level where it had resistance, it broke through, you could have taken a profit, or if you held on to it too long, you'd have hit your stop loss on that one. I'll be honest with you, probably you'd have lost the last one. Okay, so it looks like maybe over the past, let's say 3 business days where crude oil it was tradable, a simple buy stop, sell stop, pending order strategy, the sell stops wouldn't have been activated, and 4 or 5 out of 6 pending buy stops would have been profitable. Jose, a lot of times when there's a gap coming out of a weekend, you do see the gap start to be filled. And if it does, many times it will fill most of the gap, if not the entire gap. Today, it never tried to fill the gap. It just kept climbing. And so that strategy, you wouldn't have lost on it because it never came down. It just kept climbing to new high points. Okay, high point, high point, high point, kept going. Now, if we go to 15-minute candles, look what happened here. This was another opportunity to buy. It came down to this support level down here, resistance, breakthrough. It came to that old resistance level, which should be support, and bounced. Took a nice bounce up again. So if you think oil will recover back up, it's still not too late to buy. You can buy. Your take profit could be the high point it already reached today, and your stop loss could be just below this support level here. Okay, so you could risk from 31.6 down to 30.8, less than $1 per barrel, to try and make a profit back up to where it already reached today, which is a little bit more than $1 per barrel. Okay, my take would be maybe be more patient. Wait and see if it tests this support level again. And if it does, wait and see if you see an uptrend on the 5-minute candles. So maybe a pending buy limit off this support level down here would make sense. If it tests the support again, it already hit and bounced once. If it tests the support level again, maybe that's an opportunistic spot to try and buy on oil. Okay? There are a couple different ways you could approach it, but certainly there's been a lot of positive momentum on oil. You missed most of that ride up already today, so you could be patient, wait for your spot. If you think it'll bounce off the support, that could be a spot to go after it. But through the day today, you could have been in on this for hours with gold or with oil climbing, because it was responding to that positive momentum and it was breaking resistance levels. Let's take a look at maybe something like USDJPY. What was it doing today? Okay, kind of bouncing around sideways. And why is USDJPY maybe moving not so strongly up, but up? Well, the USD has been treated as a safe haven a bit lately as well, so it had a little reason to weaken, but it did climb. You see here, if you go back to the open today, you see the USD climbed quite a bit before pulling back. If we look at Australian or Euro JPY, it looks better, right? Because the Euro had more room to strengthen. The USD had strengthened as somewhat of a safe haven as well the past weeks. So pairing a weaker, what's been a weaker horse against the yen today, look how well that would have paid off. Okay, these are the 1-hour candles. Why was this smart? Because the yen is a safe haven. It should weaken during times of positive momentum, positive sentiment. So very easy. You could have gone back again just by checking on investing.com, looking at the fact that the futures were green and the volatility index was red. You could say, okay, I'd rather trade against the yen today because there's positive sentiment on the markets. Look how easy you could have been buying on Euro JPY today. It breaks the momentum, buy. Why are you buying Euro against the yen? Because you expect the yen to weaken when there's positive sentiment. Very simple strategy. Broke this resistance level, look at the profit. It got to the next resistance level here and paused a bit and broke through. Another buy stop would have won. It broke the next resistance level. Whoops, sorry, I drew a line vertical instead of horizontal. It got to the next resistance level. When it broke through, another buy stop. So you had 1, 2, 3 breakthroughs of resistance levels, all going in the direction of the momentum that you could have read within 5 minutes was happening by just seeing that the futures were green, volatility index was dropping, and so go against the yen would make sense. And there are the breakthroughs. If we look Australian JPY, why should the Australian also be climbing nicely against the yen? Why did the Australian climb so nicely today against the yen? The yen, we understand, was weak, positive sentiment. Why in particular should the Australian have such a large climb? If there's positive sentiment about coronavirus outbreak being controlled, who's a big buyer of Australian exports that is starting to open their economy? Second largest nation in the world, China, right? And so if there's positive news about the coronavirus, the economies that were affected the most, China, US, that help Australia the most, it makes sense. The Australian economy certainly could benefit from China getting up and running, and largely from the US getting up and running as well. And so you see the positive momentum with the Australian dollar against the yen. Again, simple breakthrough strategies. We can look 30-minute candles as resistance levels were broken. Here's a resistance level. It was broken here, up it went. Here's another resistance level. As it was broken, became support, and up it went. Okay, and on and on. So easy strategy to take advantage of the momentum. Now what I might be looking is to trade pullbacks. So if this pulls back down to an old resistance level, that should be support now. So this is a major level that was broken through today. If these movements pull back to those old resistance levels that were broken today, that very well could act as support. So you can have pending buy limit, pending orders ready to buy if it pulls back down. So buy limits are the type of pending order you could program to buy from a lower point now to try and get a second chance at taking advantage of the positive momentum. Okay? Any questions on these assets so far? Okay, and we haven't even looked at the indices today. All right, we can take a look at the CAC 40. Look at that. If it's not a global reaction to this news today, I don't know what is. I mean, you could see the market's gapped at opening and just kept running. And again, I hate to keep banging the same drum, but resistance level broken, buy stop pending order would have paid well. Another resistance level formed during the day today. You could have saw it placed to go with the direction of the positive sentiment. Another buy stop order as it broke this resistance would have paid well again. Then another resistance level formed here. Again, much further in the day, still not too late. Resistance, resistance. Another buy stop pending order would have paid well again. And boy, it's still trying to climb, right? So there's 1, 2, 3 breakthroughs of resistance levels today. All of them would have profited. That's on the CAC 40. Let's look at the FTSE. Same thing. Buy stop pending order would have paid on this broken resistance. Buy stop pending order would have paid on this broken resistance. Buy stop pending order would have paid on this broken resistance. And one more here. Resistance formed, breakthrough, and another payout. Yeah, it works the same way, Zolani. If we had looked at this website, and we've done it on other days, if we'd have looked on this website and saw the futures were in red this morning and saw that the VIX index was up, meaning fear was up, you'd see the opposite most likely was occurring all day today. Broken support, breakthrough, sell stop would have profited. Broken support, breakthrough on the way down, another sell stop would have profited, etc. We've seen that on other days, other sessions we've done where we see red on the futures early in the day. We see green on the fear index, meaning fear was rising, and we see breakthrough, breakthrough, breakthrough on the way down, the opposite. So absolutely, Zolani, it works in the opposite direction as well, for sure. That's a very good question. And so very easy to profit with technical trading today. Huge price action today. And you could look out of Europe back into the US, Dow Jones, same thing. Resistance level broken, becomes support, pays well. Forms new resistance. Resistance, resistance, resistance. You had the opportunity all day to have buy stops paying out. Again, broke this resistance. I had a little delay in my line drawing there. Broke the resistance and another payout, formed another resistance here, and another breakthrough with what would have been a nice payout. So all day long, going in the direction of sentiment, it was easily ascertained by just looking at the volatility index in the futures early this morning. And you know, each time you have a buy stop that kicks in on a breakthrough, you only have to risk a little bit to your stop loss, and away it went today. Same on the NASDAQ, same on the S&P 500, all around the world. We could look at the Nikkei, same thing, okay? Now the question is, where might this die if you're looking to swing trade, if you're looking to sell, okay? Zonke, if you missed it, I'll show you real quick, and I'm sorry if I'm mispronouncing your name. Positive sentiment can be ascertained real quick, 5-10 minute look in the morning at the headlines. Headlines, auto industry returns, home builder confidence rises, gold reverses after drug tests give hope for quick economic rebound. Doesn't take long to look at the headlines, and specifically to look at what's the fear index doing, going up or down. Fear was dropping. Futures were green. You could see it early on today. So then you say, okay, I prefer to go with the equities and against the safe havens. Okay, great. So then you jump on the chart and you do your technical analysis and you say, okay, if I want to go with the equities, with the indices, then I start drawing lines and programming buy stops, and it would have worked all day long. Okay. And so the question is, well, where might this reverse? Well, let's look at the Dow Jones. Let's go to one-day candles. Here's a resistance level up here. You see it right here, okay? And let me get rid of all these lines again. So this is called taking an inside-out look. You start to look at the bigger candles to get an idea, okay, I understand the smaller picture on the 1 hour candles, 30-minute candles, a lot of breakthroughs with the positive momentum. Now the question is, if you didn't trade on that, what do I do now, right? Where's this going to maybe stop and reverse? And so you see where the current pause occurred. It's right on the one-day candles. You see that? One-day candle resistance, and it's just now breaking it. It's breaking the one-day candle resistance. If you say, well, I don't want to buy this late, okay, I can understand that. So you say, where could I sell? Look at the next resistance level right there. That's at 24,800 approximately. If this movement reaches 24,800 or so, there's a major resistance level there. You could have sell limit pending orders ready to go at, say, I don't know, 24,790, 24,775. Just waiting for it to get close to this resistance level to sell. And then you don't have to risk much to put your stop loss above that resistance someplace. And you're just hoping for a big bounce back down with your take profit at the first support level that it might come back down to. Okay, so this is a strategy to trade against the current momentum at strategic locations where you expect at least a bounce back in the opposite direction. And evening time is a great time to do that after the momentum of the day is slowed. And this is what's maybe referred to as swing trading. Okay, and so that's a nice resistance level. And you see it's an old support level on the one-day candles. Support, 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 support. And then the breakthrough became resistance over here, which is right where this resistance is. So if it gets up to this mark, that's not a bad spot to prepare your sell limit pending orders now, if you like that resistance level. No guarantee it'll profit, but boy, you don't have to risk much, and the potential for pulling back down could be huge. Okay, so there's one opportunity you could prepare in the opposite direction. If we go back to say 4-hour candles, that's right here. This is the line we just drew on the 1-day candles. It's not that far up. And you see, we just broke this resistance. The current resistance on the 4-hour candles, broken, just broke above it. But you might say, okay, it broke the resistance. Should I buy now? You can, of course. And put your stop loss back below this broken resistance. Stop loss would be back down here if you were buying now to take profit up here. If you feel like it's too late in this climb to buy, okay, fine. So wait and see if it gets close to this resistance. That's the one we were just looking at on the 1-day candles. If it gets there, then maybe you sell as a buy limit from up here. You could program a sell limit. You could program a sell limit now for this price area up here. You also could at the same time buy off this broken support if you want. Okay, technically speaking, it broke the resistance. Buying makes sense with your stop loss back below that broken resistance, and your take profit up here at the same spot you would have your sell limit sell. Okay, like I promised when we started, huge price action today, huge movements, great technical trading opportunities, great breakthroughs today. Eventually a breakthrough will be false and it'll reverse. It's okay. It'll happen eventually. And you could have a pending sell stop back below in case that happens. If it breaks back below this broken resistance and comes back down, then you could be ready for a larger correction with a sell stop. A lot of opportunity here. In that case, you could do a market buy, a pending sell limit up here, and a pending sell stop back below this broken resistance. A 1, 2, 3 setup here. And that would be the case with the S&P 500. It looks the same. That would be the case with a lot of these indices. All right, so some huge opportunities here. Your Dato, good question. The margin requirement depends on your area in the world. Okay, not everyone's leverage is the same. So take a look on AvaTrade's main website, AvaTrade.com, and you can see what in your area, what your leverages are. So if you go to AvaTrade.com, at the top of AvaTrade's main landing page, go to Trading Info, go to Financial Instruments, and for any asset class, Forex, stocks, commodities, etc., if we go to Indices, you'll see what your leverage is. Okay, NASDAQ, 200 to 1 leverage, which means only 0.5% of margin requirement, 0.5% margin requirement. But that's if you have what we call our global leverages. If you're ESMA regulated, the leverages will be smaller. So thereby the margin requirement is higher. So check, go to avatrade.com, check what leverage and margin requirement you see. Good question. Okay, everybody, I think this is a good place to stop. We've been going for 50 minutes or so. Any last questions before we end things this evening? Okay, great. Thank you all for attending. I hope it helped out. Jason, the Bitcoin, if you take a look, there's been great price action on that today as well. Bitcoin has been responding similar to gold, similar to the safe haven assets, gold and the yen, etc. So you're going to see probably really nice price action today on Bitcoin. So check that out. Good luck with your trading, everybody, the rest of the week. We'll be going again on Friday with a little earlier session. If you can't catch it live, the recordings are on our YouTube channel, okay? All right, thanks everybody for attending. Bye for now.